Good morning, traders. This is Joanne with Succeed in Forex. Hope you had a wonderful weekend, and welcome to our news broadcast for Monday, January the 14th, 2008. The headlines out of Switzerland this morning are saying there is renewed subprime worries, which lifted the yen and Swissy higher. The yen and Swiss franc rose on Friday as global equity markets were lower on renewed fears of further subprime mortgage-related write-downs in the U.S. financial sector, reducing investors' appetite for risk. A New York Times report that Merrill Lynch was expected to suffer a $15 billion in losses from the soured mortgage investments left investors reluctant to hold relatively risky carry trades, in which cheap borrowing in the yen and the Swiss franc funds purchases high-yielding currencies. Analysts are saying that the news on Merrill Lynch suggests to people that we haven't found the bottom of the subprime mortgage fallout yet. On Friday, the dollar-yen was down approximately 7% at 108.86. That was after slipping to a session low of 108.63. The euro-yen traded down 160.82, slightly off an intraday low of 160.66. The dollar Swissy rallied to a 1.5-month low at 109.79 before ending the week at 110.15. And the euro Swissy scaled the lowest peak since the late August at 160, but retreated a bit to close at 162.75. The U.S. stocks fell sharply last week, and also the European shares were down, with investors convinced that the worst from the U.S. subprime crisis was yet to come. The yen at times has been tightly correlated to equity markets, as investors tend to price their risk perceptions in those markets. The dollar regained some against the euro after Thursday's tumble following Federal Reserve Chairman Ben Bernanke's comments on the economy that suggested the Fed would cut interest rates by an aggressive 50 basis points at its January 29th-30th meeting. Analysts are saying the dollar appears set to lose its yield advantage in favor of the euro, and investors are still focusing on a slower growth prospects for the Eurozone. Softer growth would prevent the hawkish European Central Bank from raising interest rates, and even might consider easing the rates. U.S. short-term interest rates futures, which track market expectations for Fed policy, show a 50 basis points cut in overnight target of the Fed funds rate to 3.75 is fully priced in. Also, there's a 38% chance that the Feds could lower the rates aggressively by 75 basis points. The news that the Canadian job losses in December were the heaviest since May 2003 pressured the Canadian currency, although it did rise 1% to 101.91. Meanwhile, the euro-pound rose to a record high of 75.87. It last traded at around 75.52 and was up 8% on Friday. Meanwhile, the pound-dollar dipped below 195.00 to a 10-month low as a weak industrial output data confirmed investors' expectations that the Bank of England would cut rates next month after leaving them at 5.5%. That concludes our news for today. We hope that it is beneficial to you, and we would like to invite you to join us at our website at www.succeedinforex.com. You can find information about our trading center. We are there during the Asian, the Euro, the London, and the New York sessions, and charts and trades as they unfold. So we find that it's been very beneficial to everyone's trading that has joined us there. Also, you will find at our website and a link to our Yahoo forum. We would like to invite you to join us there. We will see you tomorrow. Have a great trading day, and happy pipping to everyone.